Let's stick with the markets now. Bring in Michele Schneider, MarketGauge.com partner and director of trading research and education. Michele, always good to see you. I know that you were in the hangout here listening to that back and forth with Jared, and I would love to get your take on what we're seeing with Ether and some of the other cryptos right now, especially as it relates to inflation and perhaps investors using crypto as a way to hedge. What are your thoughts?
Well, first of all, what's interesting is Bitcoin's market cap has actually dropped under 50% again, while Ethereum's market cap has risen to 16.4%. So we're seeing this flipping into Ethereum. And it makes a lot of sense considering the fact that blockchain technology is really geared in, and as Jared had mentioned, the NFTs as well. So the flock into Ethereum is a bit of a surprise, but certainly not a shock. And when you step back a little bit, it's been a while now, so this is nothing new to say, but the younger generations are looking at this in two ways. Number one is the whole DeFi, which is basically the government decentralization of finance. So that's a very big attraction to the younger generation, number one. But number two is the younger generation have been poo-pooing the traditional inflationary ways to hedge, like gold and silver, and have turned more into the cryptocurrency space. So all of this, the legitimacy that we're seeing globally, the banks embracing it, even the Middle East now starting to get involved more with the crypto space, is what's keeping this buoyant. And I think Bitcoin's lack of volatility right here is actually a very promising sign, because that will give relief to people who would be inherently afraid of any kind of increase in volatility.
What do you think is going to happen when we finally get an ETF that's crypto-based? I know that the SEC came out recently and said they're going to need a little more time before they actually greenlight one. But once it happens and more institutional investors start to buy into the idea, do we see a stabilization in crypto across the board, or will the opposite happen?
I think initially we'll see a stabilization, and people who have been waiting on the sidelines to buy it, looking for something more traditional, might get in. Of course, the price of where the cryptos are at that time will be a factor. But right now, with Coin's IPO that happened a couple of weeks ago, that's come down from its peak when it first opened, and that's really related now to Bitcoin. And that's actually an interesting opportunity right here. So you don't even have to wait. You can trade Coin. And if it holds around this $300 level, that would be a good place to maybe launch from, particularly if Bitcoin can get back over 60,000. So there's no need to wait, traditional investors. There are vehicles out there.
I want to get to some of the picks you brought along with you today, Michele. We always appreciate that. And you like some activity going on now in the oil space. Interesting, given all the climate change talk. And even Warren Buffett this weekend at the annual shareholder meeting said that he has no problem getting into fossil fuels and owning Chevron right now. What's your take on that?
Well, we're actually in the oil market through USO, the ETF. And just looking at the pure technicals, it's been acting very, very well. And there's a whole bunch of reasons for that. Even though we still have alternative energy, and that is with climate change what the big conversation is in the Biden administration, there's no doubt that we're still an oil and gas economy, as are most countries throughout the world. So the fact is that we still need the most reliable way to fuel, and that's through oil and gas. Whether that changes through cleaner energy, through nuclear energy, et cetera, remains to be seen. But for right now, I think that we're going to see oil head towards $70 a barrel and possibly even higher. So I do agree with Buffett on that. In terms of individual oil companies, we really like British Petroleum, because that actually is doing both traditional oil and gas, but also revving itself up to have a whole part of their company dealing with alternative and cleaner energy.
All right, want to switch gears and talk infrastructure. We know that Biden's going to, has some challenges getting this thing through Congress the way it sits right now, $2.3 trillion. But how has that been affecting your portfolio, and what are you looking at in terms of infrastructure plays?
Well, it's really hard to get negative in the market right now because of the way the transportation sector is reacting. Obviously, very optimistic about the idea of some level of an infrastructure package getting passed, which no one would disagree isn't completely necessary. It's really going to be the filigree around the infrastructure package that I think will be the sticking points, particularly the social services part of it, the free community college, et cetera, the tax credits. So if we just focus on infrastructure right now, I think the market's telling you something is going to happen. And that will be a good thing. We need it. We need it for a growth, for GDP to get higher, and we need it for job creation. So right now we're sticking to that area. We are already in floor construction, that's FLR, but Vulcan Materials, American Tower, which deals with 5G. These are all holding up very well today as we begin the month, and they've done a good level of consolidation. So they offer a decent risk to know right away if things change.
Love when you bring your picks along. Michele Schneider of MarketGauge.com. Thanks a lot.